So something has finally broken, and it's not necessarily the back of inflation. Over the last week, we've seen the failure of Silvergate, Silicon Valley Bank, and Signature Bank. And these are really, to me, the first signs of potential major cracks in the banking system. Three things set up SVB or Silicon Valley Bank to be in the position that they were in. A combination of the government and the Fed. So the government had stricter regulations on big banks that forced flows into smaller banks. So government regulation was a problem. The Fed had been on a decade-long spree of quantitative easing, flooding the system with free money. That put lots of money into the system. And then the government and Fed combined take responsibility, or should take responsibility, for even more money injected into the system because of out-of-control government spending, culminating with the $5 trillion of COVID relief, specifically the last $2 trillion from the American Rescue Plan. That was unnecessary because the economy was already in recovery, followed by the CHIPS Act and the quote-unquote Inflation Reduction Act. And the Fed was complicit in this by enabling the government to spend all that money by monetizing buying the debt. Two things caused the failure of Silicon Valley Bank: bad investments in 10-year treasuries, longer-term treasuries, that were worth less than what was shown on their financials because they were marked as held to maturity, which they would have actually been able to get back 100% of their investment if they held them to maturity, rather than reflecting the true value or the market value. If they were marked to market, the losses would have been easier to see on the balance sheet. That caused a run on the banks because on March 10th, when Silicon Valley Bank was taken into FDIC receivership, 92.5% of its deposits were uninsured. That means that their customers had more, much more, than the $250,000, which was insured by FDIC insurance, because they couldn't put it in the big banks because of those regulations. So that fact kind of led to the critical failure of SVB. So here's the more troubling part of some findings that were put out by an NBER paper that was circulated out over the last few days. Silicon Valley Bank was not in last place when it comes to the mark-to-market losses. There were about 10% of banks that were actually in worse condition than Silicon Valley Bank. So I don't think that we're done with the banks failing. I think that what we're seeing now is a lot of end-time things kind of coming together and setting the stage for a one world government, one world currency, and, those kind of things. And then we had Biden come in and say, don't worry, I'm on the job, everything is safe, which is just, it makes me laugh because if I don't laugh, I will cry. But, he's essentially nationalizing the banking system, saying that even though all of those billions of dollars of deposits were not FDIC insured, FDIC is going to cover it. FDIC doesn't have the assets to cover it. And he says that taxpayers are not going to bear the brunt of it, but that's just an impossibility.